Hello traders, so in this lesson we're going to talk about the truth about timeframes, something nobody ever told you. So the first thing we need to address is the concept of a dominant time frame. We need to understand that timeframes do change. So why do timeframes change? Why is timeframes more of a dynamic concept instead of a stationary? And if you don't believe me, look at the statistics. If you look at your ADR, which is your average daily range, from a year-to-year basis, you would see that price does not move in a consistent way. So let's take a look at Euro USD. Here we got Euro USD. So if you look at Euro USD, in 2014, price moved 74 points per day. So this is the amount of points price moved per day. But in 2015, price moved 124. So now let's move on to our current years. In 2021, price Euro USD moved 68 points per day. In 2022, price moved 91.5 points per day. And in 2023, price moved 81 points per day. So just by understanding that the ADR changes, you can't say that, okay, this is Euro USD and your strategy from last year or even a few months ago, you were trading your 1 hour order block in the discount zone. So let's say this is your 1 hour order block discount zone. You can't really trade this way just for the simple fact that it worked previously. Why? Because the average daily range changes. Price at a certain point, let's say, moved 90 points per day, and now price moves 105 or 110 points per day. So the higher the time frame increases, obviously the higher your time frame increases. So the more price moves per day, the higher the time frame you are going to operate in. So look at this example. Price never reaches your 1 hour order block and even gives you an inducement here and gives you a stop hunt here reacting of an inefficiency. So in this case, as you can see, your 1 hour order block clearly did not work. And when price does eventually come back to this order block, it will more than likely run through it. Why? Because we already had an initial reaction, just how I explained on my website. So, but if you look at here, in this case, price reacted from the 4 hour order block. Price reacted from the 4 hour order block. So this is what I mean by you cannot maintain the same time frame. Time frames do change based on your ADR. Before you proceed, please make sure you like the video and leave a comment. This video is completely unmonetized to make sure you guys are not interrupted by ads. So the first step is to get a clear visual read on price action. And the way you would do that is by looking at the forensics, which is your market structure. That's the easiest way to look at price action, to get a read. As you can see, this is your high. Now this is your low. Now this is your higher high. And this is your higher low. This is your higher high. This is your higher low, and so on and so on. So your structure will come in two types. The first type would be your supply and demand, where price breaks structure and goes for a deep retracement. As you can see, price breaks structure and goes back for a deep retracement for continuing higher. And this other example is your support and resistance structure, where price breaks structure and then does not retrace deep back inside the range and rejects at the previous shelf. This is what we're going to be looking at as a representation of price. So the way we're going to go about this is split it into two. We're going to split it into macro and micro. Macro will be our higher time frame and micro would be our lower time frame. So the way we do this is we start off with our macro. And how do we identify our macro is by going on the highest time frame we possibly can and seeing clear structure. As you can see here, we're looking at current structure. We're not looking at something that happened 3 months ago, 4 months ago, 5 months ago. We're looking at current price action, how price is behaving currently. Because the ADR right here could be completely different from the ADR right here. So our main focus is our current price action. So the problem here is when you see price action like this expansive price action, you know on the lower time frames, it's actually structure. But on this current time frame, which is the daily, we're just seeing a few daily candles go up. So our main goal here is to go lower. So it's going to 12 hour. And this is why I have my time frame set up like this, from the daily to 12 hour, 8 hour, 6 hour, 4 hour. And what you should do as an individual trader, you should look at your own time frames, basically. Make up your own sequences of time frames. Why is that? Because every trader is different. you can see something better at a different time frame that I could see different. At the end of the day, what could look clear for me on the 12-hour might not look really clear for you. So let me go a little bit lower. What I see here, I can see clearly I had a swing high, swing low, swing high, and a breakup structure. I can see a bearish trend on the current price action. So now what I do, I mark my previous range, mark my swing low, and I mark my swing high. So now let's go lower. Let's go on the 4-hour. As you can see, we have expansive price action. And this is not what I'm looking for. Just how I explained previously, I need to see structure. So our macro is set. Our macro is set. So now I'm looking for my micro structure. So I'm starting to see structure getting built right here. So let's wait for price to play on. Got a swing high and a swing low. So now we have our range right here. What we're waiting for is a fusion of both ranges. We are looking at both time frames to be in alliance. So now what do you have? You have a bullish microstructure, as you can see. Why is it bullish? Because you had a swing low, swing high, swing low. Now you have a higher high. So now you're expecting a lower high to be made and for price to potentially either go here or go here. What we're waiting for is for both of our macro and micro to be in line. As you can see, we picked the 1 hour for our micro because we got a clear read on price action. So currently this is our range. Swing low and swing high and swing low. Price is back in the range. See, price comes out of that range. And price came out of that range. So now this high was taken out and price is rejecting from this level. So what are we waiting for now? We're waiting for a breakup structure to the low side. Why? Because this is our macro range. Let me make this a bit more clear in case you're confused. You had your swing low and swing high. Then price broke out of your macro range and price is now coming back inside of what? Your macro range. So we are waiting to see a micro on the 1 hour time frame, a micro structure to the downside to align with our macro structure to the downside. So we're combining both time frames. Let's pay attention to the macro. Now price is rejecting from this level, showing us what? Support and resistance structure. Now price could always come back and go for a deeper supply and demand structure. So what we're waiting for is a break out of a range. Once we can get a break out of a range, we can say both timeframes are aligned and we can take a trade with the probabilities in our favor. Now you have a breakup structure. Price broke this low and broke this low. So what are we waiting for? Just how I explained on my website, you're looking for the mirroring effect when it comes to your macro and micro. You're looking for a mirroring effect. So what happened on the macro must happen on the micro. So knowing that, what are we looking for? If we know on the macro that price rejected from a support and resistance structure, we're looking for a support and resistance structure on the micro. And again, make sure you check our website and use code ETM Army for 20% off. So what are we waiting for? Waiting for price to reject from this level and come down. So if you are looking for a trade, your highest probability trade would be something like this. Let's look for a decent TP. What is your next high rejection point? You can see that price has been rejecting from this level. So this could be your first TP and your second TP could be somewhere around here. This could be your first TP and this could be your second TP. So what happened here? both time frames align and price is rejecting from the exact same thing that happened on the macro time frame. So let me show you how this is not only the most optimal way, this is the most safest way to look at time frames. It stops you from making silly mistakes and taking silly losses. So let's go on a lower time frame now, look for our macro. So what do we have here? We're looking for our macro. On the 12-hour here, I can clearly see a swing high, swing low, and as a supportive attribute, we've seen previous swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. And we've seen structure previously before structure expanded here. So this is a good time frame. So what do we have here? Our swing high and swing low. And again, if you are looking for a supply and demand structure, you're obviously waiting for a price to retrace back inside of the range. If price retraces back inside of the range, you would consider this a supply and demand structure and you would be looking to mirror this type of price action. But if price rejects from this point right here or even a little bit right here without a deep retracement, this is a support and resistance structure. So keep that in mind. So let's go on a lower time frame where we can see price action. You had a swing high, swing low. So let's go a bit lower. At a swing high, swing low, swing high, swing low, and price expanded again. So more than likely we can go on the 1 hour and we can see clear structure. We can see a swing high, swing low, swing high, swing low, price consolidating here, then breaking out of the range. So at least we can see structure here. What are we waiting for? We're waiting for interaction with our macro, which is either our support and resistance or our supply and demand. Have structure to the low side. And I would honestly go on the 2-hour time frame in this case, because there's a lot of information that I don't need. Or maybe an hour and a half. I would honestly stick with the 2-hour. So let's see, you have a rejection right here. So if you have a rejection right here and price was to expand, remember what we were looking at. We're looking at our macro range. Price would have to break this level. And if price breaks this level, we're waiting for a bounce to mirror our macro. So price never reached this level and we have a new swing high. So let's keep in mind with that swing high. Price going deeper in the range. See, price comes out of the range. And price broke out of the range. So again, I wouldn't consider this a supply and demand structure. Why? Because price did not reach deep. As you can see, price did not reach deep in the range. Price rejected exactly at the 50% point and not far away from our shelf. So if price was to reach somewhere here or all the way to our discount zone, then this would be a supply and demand structure. So I'm still considering this as a support and resistance structure. So what do we have on our micro, which is the 2-hour in this case? We have a swing high, swing low, and a breakup structure. So if we're looking to mirror a support and resistance structure, the same support and resistance structure we had on our macro, we're looking for a bounce right here. So let me change the color here. We're looking for a bounce right here. Let's make this thicker. So I would be looking for a bounce right here with my stop loss right below this level right here. To be honest, if price does even reach a supply and demand structure as far as the micro goes, this trade wouldn't work probability wise. So you could even shrink your stop loss up to here. And your TP would obviously be above your micro highs. Okay, price is rejecting from this level. And now as you have a new swing built, your first TP would have to be right here. And then your second TP would be right there. Okay, your first TP's hit. Let's see if we can get to our second TP. And our second TP's hit. So now let's look for another trade. So we are making the Discord server. If you're interested, make sure you join the free Telegram for updates. Since you had that support and resistance rejection and price did not retrace deep inside of the range, you are on a macro basis in a support and resistance structure as well. So this would be your swing high and this would be your swing low. Now let's go lower. Let's look for structure on the micro. You can see here you had a swing high, price came down, and now you have another swing ready to form. And previous to that, you can see clear price action here. So we're going to stick with the 4-hour time frame until price changes. What do we have here? Clear structure. Wait for a break. Now you have a break of structure. And price came back inside of the range and rejected quick. So you would be missing this trade. Just simulating real life probability. Let's carry on. And now you have another rejection. So now the price clearly formed a swing high and rejected. This would be a better trade. So what are you waiting for now? You're waiting for on your micro for price to break this level and reject right here, emulating the macro rejection, the micro support resistance structure. Let's see. And what happens here? Price never reaches this level. Price never breaks above this level to even give you an opportunity for a support and resistance microstructure to the upside. So how does this help? This saves you from a silly trade. By a silly trade, I mean, there's people that would take a trade right here, not understanding that they would take a order block trade right here. Right, so let's go back. They would take a order block trade here because they think this is an internal trap. But what they don't understand is your macro is in a support and resistance structure. So it makes complete zero sense to take a supply and demand structure, anything internal. We're not looking for anything inside of a range. We're looking for outside of the range. Why? Because the macro is working on a outside of the range premises. So taking a order block trade right here would result in a loss. And this is how this way of looking at timeframes protects you. Now, if price broke here and rejected right here, this would be a decent trade. And if you lost, at least you can lose knowing that the probabilities were in your favor. But taking silly losses like an order block trade right here, knowing that the structure on the macro is support and resistance, makes no sense. And as you can see, the trade obviously did not work out and price switched direction.